We buy LNG regularly. We're the largest importer of LNG into the country of Colombia for our power plants. Before the escalation of this war, we were buying at $10, $11 an MMBTU. And we just bought last week at $20. And then I saw trades print yesterday at $30. And so that is just a huge escalation in price. And it's basically fear of not getting cargoes.
Drawing on your experience in the industry, I saw in the FT there was a headline, this is an Armageddon scenario for the gas industry. Have you seen anything like this before? I guess the closest analogy that I can grab for is what happened a couple of years ago with the launch of Russia's incursion in Ukraine. How different is this? How much more devastating is this potentially?
So a couple of things. One of the problems in Europe is they didn't have the import terminals, and so they had to rush to build the import terminals straight through permitting really fast. The import terminals are where they need to be at the moment. Now it's access to actually cargoes on the water. Qatar's 17-20% of global trade. The actual facility has only had a certain number of trains. We still don't have clear information.
Don't have the details yet.
But
and the train is what
blocked.
you need to make it shippable.
Yeah, so the train takes the gas, takes it to a very low temperature, a liquid, then puts it into the vessel. But if the vessel can't get into the strait, it can't pick it up. And it's a perishable item as well. LNG runs out, it evaporates. So if it's not getting taken out on the ships, they have to shut it in and then shut it in at the well. So then it's going to take time to restart as well.
What's your sense of how long it's going to take to get some of those facilities back online? And then do you have any indication, as someone who's a big player in this industry, of when those boats are going to start moving?
So, I was talking to my construction company that's building my facility in Texas. And nobody really knows what needs to be repaired at the moment if you're on the outside, because it's not that well. No one's got people in there on the customer side doing the inspections.
You guys probably don't want to telegraph necessarily.
No. But it could take 3 to 5 years, because building something from scratch versus fixing something that's already built is a lot more complicated. And so if it takes 3 to 5 years, the main problem is just 1 or 2 trains isn't the end of the world. It's just getting the strait open again. So once the strait's open again, that'll be the main downward pressure back on price.
You're at work on projects in Texas and in Alaska. So before we get into maybe the granular details of those, what does all of this mean for the natural gas market, the industry here in the U.S., as you sit from your vantage watching what's unfolding in the Middle East?
So as an industry with domestic natural gas, there's been a desire to get what we call more on the water, to get exposure to a broader range of indices. And that's going to continue, right? But Henry Hub is only impacted so much by exports, and every cargo that can be exported is already being exported. So I don't see it driving a huge outcome on Henry Hub immediately. That'll be driven by other issues. But it does say that more LNG projects can come online, which will then put upward pressure on long-term Henry Hub prices.
Quickly here again, I drew this analogy to the Ukraine war. Did that have a catalytic effect here in the U.S. and kind of changing the direction of the industry when that conflict got underway just a few years ago?
Well, many projects were sitting in permitting doldrum and they couldn't attract financing. Through COVID, LNG prices went down to $2.50 delivered. Wow. We're talking about $25 now, so that's a 10x swing.
That's crazy.
Coming out of COVID at prices that low, and then Ukraine war hadn't happened, there was things had slowed down. Post that, everything's come back, and the U.S. is the most secure place to buy LNG from. It just is.
The president has said recently that the U.S. doesn't need the strait. We're energy independent. We don't need it. But that's not quite true, right? It seems like it would be helpful if that was moving, even for U.S. companies like yourself, just to bring the overall prices down.
Well, I think everyone wants lower energy prices. As an LNG guy, you might think I want a high LNG price, but lower prices has more demand, and I'm more of an infrastructure player. I want to sell long-term energy. Sure, everyone wants a little bit of volatility to make some money. So when energy prices come down, I think we all benefit, and that's what will happen from the strait. But as a domestic, as a nation here, we've got all the energy we need.
Let me give you a minute to talk your book here. So you've got this project in Alaska, and as we talk about the way that the global energy market is being affected by all of this, what does that project offer to, say, customers or clients in Asia who are looking at the very real prospect of, because of what's happening in the Strait of Hormuz, feeling like they don't have ready or reliable access to the natural gas that they need?
So Alaska, a little bit of background on the project, right? It's a very large project. It's 20 million tons per annum, which is a very significant size project. It's a two-phase project, a pipeline to bring gas from the North Slope down to, let's call it, in the south near Anchorage, and then an LNG facility to export it. So two-phase project. The pipeline is at ready-to-build stage now, and the LNG facility is about 12 months away. The whole thing is fully engineered, all permits, all rights of way. It's had $1.5 billion spent preparing it. And the customers in Asia like it because it's a 7-day sail to Japan, 10-day sail to Taiwan.
And Asia's been hit really hard, especially by this strait.
In particular, India and China are heavy buyers of Qatari LNG. Korea and China and India are heavy buyers of Qatari. Japan and Korea less. But it's still cargo is being taken out of the market. And so if we can take it down from Alaska, it's closed, it's secure, it's a U.S. cargo that's protected, 5-day sailing in U.S. waters. It's a good thing for our allies.
Quickly before we let you go, critics say that there are no buyers right now and the price tag is likely much higher than what you're projecting. What's your response to that?
Well, I know because I'm selling LNG out of the Gulf Coast. I'm selling it out of Alaska. We can offer excellent prices, and I can tell the interest right now is there's upward pressure on that price.
Probably a good moment to be pitching this, needless to say.